Welcome in, guys. Welcome in. What's going on? Get started in a quick second or not. Well, we thought yesterday was wild. I mean, we just had the most insane run yesterday. Today, they literally just flipped the script heavy on us right now. But, I mean, that's pretty much why I don't even think you really heard me talk much about a tech stock for the most of the day. What's going on, Lobo? How's the day? I hope you close green. I think everything that I was looking at, I don't think everyone had a reason to really close red. For most of the things that I was looking at, Um, if you pretty much heard me on from the get go, I wasn't even talking about tech stocks. I really just felt like the odds were against me this morning. Usually as a trader, I mean, you pretty much as you get used to this market, you understand where your comfort level is, right? And after such a move yesterday, I just didn't have that comfort level this morning. And just knowing the fact that we were gonna have so many Fed speakers, you heard me mention that yesterday on live here. I said be cautious about the fact that we have Fed speakers. Now, I was neutral to bullish yesterday. I had no reason for me to really be bearish as of yesterday. The market really had no sentiment. Nothing internally was telling me that we were really gonna rock the boat and we would have this kind of decline that we had today. Because had we not had that kind of Fed news, I think we honestly we could have continued to push higher. But the fact that we ended up having those Fed headlines come out, um, that literally just rocked the boat, and we just saw the market just tumble. So from the get go, it just didn't feel right once the opening bell hit. Nonetheless, that's why I did take a little bit extra time than I usually do every this morning, and I was actually going through scanners looking to see what other opportunities there were outside of tech, which usually garners me to do a little bit more extra work in the mornings to really scope out plays that are outside of just what I would normally play as the tech sector. All right, what's going on, Will? So that was pretty much just getting that vibe, getting that understanding of what I was the odds against me with the Feds that were speaking today, the massive move that we had, especially out of Apple and Microsoft moving together yesterday. That was more so a little bit of a red flag from the get go for me yesterday, and that's why once I woke up this morning, I saw what the price action was early on. I didn't get the gap up that I was really expecting this morning to really just steamroll right into the Feds talking. So that was why I was a little skeptic on trying to really even talk about any of the tech names early on. I know that a lot of you pretty much either swung Twitter or you swung Tesla calls. Sorry for those of you that really swung the Tesla calls. This is usually why, you probably hear Avery even say this as well. Usually when everyone's in a certain trade, it typically ends not to work in the favor of everyone. That's just the way the casino is really made, right? You don't all just sit at a blackjack table expecting to all get 21 while the dealer ends up losing. That just doesn't happen that way, right? So that was literally with just the odds against you and just knowing that your odds are not all going to be the same, in which it's not going to favor all of you winning all at the same time. So that was just one of the things as well. I didn't swing the Tesla calls. I couldn't convince myself to really hold that. So that was something I just stayed sidelined. Even today, I stay sidelined on Tesla as well. I pretty much just took the two squeeze plays. The one that's early on that I got in, we saw that one pretty much double off of SST. That was just I did not expect that kind of squeeze. I think the most I was expecting was about 23, 24 off of that for the upside. In my wildest dreams, that I expect that to go past 30. But that's pretty much the beauty of that. And then once I saw it halt the second time, and this is another thing of just being in this market as long as I have, and from my experience with trading penny stocks, is that usually after the second halt of a stock, usually it doesn't end very well. So once I ended up seeing that second halt, and we pretty much were pushing over that $30 mark, that was when I pretty much just cut bait, and I was pretty much out. So I did not want to hold. Once we saw that third halt, we saw that it pretty much declined about $4 or $5 rather instantly, and that's why I ended up just. I was kind of glad at that point when I saw that third halt. I was like, thank God I got out of this, right? But that was a hell of a move. From the moment that I pretty much called it out, and I even made noise about it pre-market, dropped it on Twitter, dropped it in the Trade Ideas channel in Discord, and you had an opportunity to buy. I think it was about 25 calls for next week that were about 60 cents at open. Those actually went up to about $9 a piece. So that would have been from $60 to $900 by the time that it literally got to that second halt. So that was insanely crazy of a move. I don't think that we're gonna get that kind of move just shortly, within at least not this week. So hopefully there's another one coming like that. I'll be on the lookout for it. It's definitely gonna make me look at my morning scanners a little bit more right now to really get into another play like that. So hopefully there's another one on the way. But nonetheless, let's get into some of the names that I'm watching. Obviously, if you see my watch list off to the right now, there's only one tech name that's up there, and obviously that's Tesla, because obviously I know that everyone's constantly watching Tesla. So I'll just give you the in and out of what I'm pretty much looking at in terms of the levels. But everything else is pretty much outside of tech right now. I would expect the fact that we likely get some kind of small gap up, and that's what I'm going to primarily get into right now in terms of the upside and downside. But I don't think tech is going to have a beautiful continuation to the upside, and hence the reason why right now in my watch list I am going to stay sidelined, other than the primary watch of Tesla, which everyone's going to look at. All right. But on SPY Daily, pretty much what I was able to gather from today's price action included is this little falling wedge type of action that we have off to the right here. I'm going to look to see if we can get a break over that 454. Otherwise, that's likely the spot that I would expect that we get morning push towards into the Fed minutes that we have at 2 p.m. Eastern tomorrow. I would expect that our upside is going to be limited toward that 454 mark, in which we'll hit the downtrend resistance off of this little falling wedge action. And if we end up breaking, pretty much breaking down from that 454 resistance, then we're looking at pretty much breaking down below this 449. And I have us coming down all the way towards 446 half. And that's not going to be pretty for us. Otherwise, if we do get good, pretty much good feedback out of the Fed minutes, we can get that great push right over that 454 mark, and we can make our way towards 457. And beyond that, we're looking at breaking that prior high from the 29th of March here from last month. So that's ideally what I would be looking at. But 454 to me tomorrow morning, going into the Fed minutes, is that big key level that I'm watching. So that's primarily the big number that you really want to watch, is that 454 to 454 half. If you really want to get into like a little bit of a range there, 454, 454 half is what you want to watch to see us move in towards into those Fed minutes, in which we'll get the response that either is going to push us north, or we're going to reject off of that downtrend resistance and come crashing back down. All right. So that's pretty much what I'm watching as of tomorrow. Obviously, we'll see what that daily candle is gonna look like. Hopefully, it's not an inside candle, because if it ends up being an inside candle, we push north of 454 half here, and then they just pretty much drop us right back down towards 450 here. That's gonna be pretty much of a horrible scenario, in which then we have to wait until uh, pretty much that's gonna be Thursday jobless claims, and then we'll see which direction they really want to swing this up or down. That's just gonna give us a nice little inside day tomorrow, but that's gonna put us basically in quite the range, in which we're not going to see any kind of explosive moves on a lot of different names to the upside or downside. All right, so keep that in mind as well. So don't try to go too wild out of the money in terms of directional moves, out of the money for calls or puts, because we could definitely even have a little bit of an inside day tomorrow. So that's something to just keep in mind. All right. Other than that, let me get right into some of the plays that I was pretty much watching, just outlined pretty much. Big one, of course, was Tesla. Everyone has their eyes on Tesla. We have this beautiful little ascending wedge action going on, expanding wedge. We pretty much came right close enough towards the support trend line here that we have, right down at 1081 half, basically. I'm gonna look to see if we pretty much, if we don't get a nice little gap up tomorrow morning, that'll likely be your dip spot at that 1081 spot, and then we get a nice move. The ideal spot that I would ideally like to short Tesla here would be at this 1115 mark. This will pretty much be at a nice little confluence, in which we had that prior high back from March 29th as well. That's pretty much also, if you saw from the falling wedge action on SPY, that was that high that we pretty much set in as well, that prior high. So I would ideally like to short at this 1115 mark, and then we pretty much break the support of this ascending channel. It's a ascending broadening wedge action, and we break under that 1081 mark, and we'll be looking at this gap fill testing here at 1054 roughly. All right, so that's what I'm going to be looking at shortly 1115, and then we break under 1081 here, and I'm going to look for testing the gap fill at 1055. All right, that's ideally what I'm looking at. If we break over 1115, then all eyes will be back towards that 1200 mark, and that's likely going to flood the tape here. We'll see all those buyers coming back in for that 1200 strike. That's pretty much has everyone just sitting out there taking a fat L right now. All right. So that's pretty much Tesla. The other thing that you ideally want to look at tomorrow, and I think this is more so what should be in focus, is the bank stocks. So the two that pretty much stood out to me more so was JPM. The other one is Goldman Sachs, which I'll get to. But both have a beautiful little falling wedge action going into tomorrow. Obviously, if we get any kind of news about further rate hike, and that's ideally what we're going to be looking at off of those Fed minutes, is that we want to see if we get any kind of increase in those rate hikes, and that's likely going to cause some kind of sporadic spike in the bank names. So this is where it's going to come into play right now. Obviously, we want to see that break over this downtrend resistance. That's roughly around 134 half. And then we'll be talking about completing this gap fill here right at the 136 mark. So I don't expect too much of a continuation off of it. That's something to be mindful. But you want to be early to the party before the Fed minutes come out. And that way take advantage of that little premium spike that you're likely going to get off of the news alert from the Fed minutes. All right. So if you can get in above below the downtrend resistance here below that 134 half, then that'll be your ideal spot in which you want to take that risk and wait for the Fed minutes to come out. Hopefully, we get some kind of news about increase in the rate hikes, and then you pretty much look to get a spike, ideally into that completion of the gap fill at that 136. All right, and that's how I would pretty much treat that. Similar scenario on this one is Goldman Sachs. Same scenario, ideally here, nice little falling wedge action. You get your move over to the downtrend resistance at that 326, and then you pretty much look to see if you get a nice little premium spike in which you get a move up towards 328 half, and we see if we get any kind of continuation intraday off of that. So that'll be another one. You look to see if you get in right under this downtrend resistance 326, and look for that premium spike off of the Fed minutes as well. All right. So that's another one. Just both textbook falling wedge actions. If you see it, I think that's pretty much. If I'm not recall, that's usually Sig's usually favorite uh, kind of pattern. He usually likes to get in at support though, but this usually can be a very sporadic in terms of the upside. Sometimes you just get a straight line up and not even a retest off of the falling wedge. So it all depends on the news of the Fed minutes. But if I can get in right here close enough to that downtrend resistance and look to play that premium spike, that'll be a quick buck that you'll get out of that tomorrow. So that's something to keep on watch. The other one that's really just been on the radar for the past few days, I think even going back towards last week. If I'm not mistaken, I had it on the newsletter about 2 weeks ago, and that was practically in the low to mid 140s. But I'm looking at an ascending broadening wedge action into the close here today. I don't ideally like the spot that it's currently sitting at right now. That's the only thing that I realized after the close here. So we could potentially get a nice little bounce, maybe see a bounce here up towards that 152. But if we end up breaking the support here, I'm not going to be too happy about that, because then that pretty much opens the floor down here towards that 150 flat. And if we really see this start to roll over, then we can come all the way down towards 146 half, and that's not going to be pretty to test the gap fill below. So this is just one. I know it's already had such a move in the past few days, past 2 weeks already. So you would assume at some point here we're going to likely get some kind of drop off, some kind of intermediate pullback. Ideally, I would hope that we end up holding this 150 if we do break down off the expanding broadening wedge here. And maybe we consolidate, retest as resistance, consolidate a little bit more, and then we get that pushback up towards that 155 that I've been targeting for quite a few days already. All right. What's going on, DK? So that's pretty much what I'm looking at with Walmart. The other name that crossed my mind was LMT. This is one that was pretty much showing a little bit of movement early on this morning. I'll keep it on watch here tomorrow. Obviously, you see the nice little wedge action that we have going on. You had that nice little spike here this morning early on. That was about how much of a candle? That was quite a candle. 445 up to 454, about a $9 candle right there on that 30-minute. That's a hell of a move. We did create a nice little downtrend resistance. So let's look to see if we get a move here over that 448 mark. And then you have a nice little intraday gap that you created at that 450 level, and we could push back towards the highs of the 454 mark. So obviously, looking outside of tech, this would be the kind of names that you're looking to get into if you see that tech pretty much reacts the same way that it did today. And this would be one of those kind of moves that I think I would preferably like to get into. Exactly when we pretty much break the downtrend resistance 448, I'll take the run to the gap fill 450, look to secure some profits, and then break that high that we had from this wedge breakout at that 454 mark. So this is just a beautiful one. The other one was United Healthcare. I think Avery might have name dropped this one. Another expanding wedge kind of action here we have going on. We could be forming a nice little inverted head and shoulders type of action here within this wedge. This is something that I'll be watching to see if we get a nice little curling action right back to the upside here. If we can get a nice move here back above 419, 420 will be the ideal cushion spot. If we get that move over 520 here, I think this is one that I'll likely jump into. I know that premiums usually, uh, not the premium, but the liquidity is usually sometimes an issue here with United Healthcare. So that's something I'll take a peep at tomorrow morning. But if we get that break over 520, I'll look to see if we get a nice little curling action to the upside, and we can take this right up towards 526 to the uptrend resistance here that we have to see if we get a further continuation. But over 520, I'm targeting 526 here to that resistance, and we'll see if we get continuation, bigger picture. All right. Other one was Dare. Dare has a nice little wedge action. Only reason I'm pointing this one out, and it might be a little bit early, but it does look like this wedge is going to make a directional move on Dare here tomorrow. Granted the fact that it's pretty much going to close in right towards the end of the day on this little wedge. I'm going to look to see if we get a meaningful directional move out of this. Either we're going to get a break over this 417 mark, or we're going to get a breakdown under the 413 that we're pretty much hovering right at support here on the close. So this is one I'm going to watch to see if we get a directional move off of it. There's not a clear cut on this one just yet. So I'll likely give an update if I do see something meaningful that I preferably like out of it. But either we're going to make a move over 417 or you break down under 413. That'll be more so where you decide how to play that directionally. All right. And then just covering the last one here real quick was just MasterCard. Obviously, you saw that I covered Goldman Sachs, covered JPM. It might be a day for financials tomorrow. So just watching this nice little falling wedge action here as well on MasterCard. I'm going to look to see if we get a breakout over this 364 half. And then I already had this resistance that I had targeting towards 370, 380 was my move here. So I'm going to look to see if we get that break. We get that break over 364 half. And then I'll be playing this one up towards 374. And that'll be a beautiful one. I usually like how MasterCard also moves. The premiums move very beautifully. So this might be another one that maybe I even prefer MasterCard over the banks itself, but it all depends on the price action in terms of how the banks are performing overall versus maybe a MasterCard and Visa by morning. All right. So those are the ones pretty much caught my attention. Again, just trying to avoid the tech sector right now, as I did this morning. Obviously, the squeeze plays pretty much were my benefit this morning in pretty much avoiding all the tech names, pretty much probably avoiding me taking a fat L trying to chase that in either direction earlier on this morning with those tech names. So I'm glad I pretty much took that effort this morning, looked to see names outside of the tech sector, all the nice little squeeze plays that were pretty much available to us, and that was just basically the SPAC names. That they just had rotation. They were pretty much moving. Just a drop a hint right now for those of you that maybe want another nice little squeeze play for potentially tomorrow. Keep an eye on BBAI. This might be one that's pretty much on the radar. It looks a little bit like a nice little tilted cup and handle right now. I saw that at one point it was up almost about $2 after hours. This is just a little sneak peek. So keep an eye on this one tomorrow. If we likely get as long as we pretty much hold this pretty much resistance point that we have right here, that 10 half, that's ideally your support level that you want to see hold by tomorrow morning. If we hold that 10 half by tomorrow morning, that'll be your ideal buy-in spot tomorrow, and we can hopefully get a nice little squeeze out of this one. How high this can go, we'll see by morning. I just want to see how it reacts if we hold up by tomorrow morning, and then I'll be able to pretty much gauge, get a better chart on this, and see where we're maybe headed towards. All right. But this might be my squeeze play tomorrow, especially. So I will definitely keep an eye on this one come tomorrow morning, and we'll see how she plays out. All right. Other than that, Cody, you mentioned Disney. Disney right now kind of invalidated my levels in terms of the newsletter play. Hopefully you were able to take advantage of that yesterday more so, because I know that we had a beautiful move of that once my alert pretty much triggered, which I said it verbally yesterday. And I think I also dropped it in ideas, if I'm not mistaken. So hopefully you were able to capitalize on it yesterday. But as of right now, it's not looking too hot. It's pretty much flirting with this gap fill that you have under that 130, 134.94 to be exact. That's where you're going to enter the gap fill. I would ideally like to see it end up holding this 133 half. That's the spot that I want to see it hold. If we can't hold 133 half on Disney, though, it's going to get pretty ugly. All right. So hopefully yesterday, if you took that alert, you kind of secured your profits a wide array. Maybe you got about up to about 15, 20% yesterday, hopefully, and you kind of maybe ended up taking your profits. I would hope ideally. All right. But right now, it's not looking too hot with the broader market right now. All right. I know I looked at Twitter yesterday. I think I mentioned yesterday we were pretty much watching that 54 mark. When I mentioned it yesterday, we literally went right into that supply zone that I expected. I said this would be the supply zone in which I would expect profit taking to step in. Guess what? We ended up getting that profit taking. We did hold the halfway back on this candle though, so that's definitely a good sign. But if we get the break back over that 454 half, then we can start talking about this towards that 60 mark, in which that's going to be where you're going to see buyers pretty much flood the tape on the flow, and we'll see that accumulation for that $60 mark, in which that was basically the level that we tried to hold support here across this entire move. We had a little bit of a distribution before we had that major drop off. So $60 would be the ideal spot in which I would expect to be the target. But we do need to get over this high of the day here today over that 54 half. And then we can talk about that $60 mark. All right. But that's pretty much all I'm seeing. Otherwise, if you end up breaking here under that $50 mark, seems like what we're hitting our head on. I think that's where all the accumulation was right now. Obviously, you see they pretty much defended that $50 mark pretty well into the close here. But if we lose that $50 mark tomorrow, it's not going to be pretty, because then I think we're going to end up flirting with testing the gap fill basically that we created off of today. So that's something I'd be watching off of that. But then you're basically looking at breaking down under 47 if we can't defend that $50 wall come tomorrow. All right. But 54 half is that big number that you want to see it break over tomorrow. Okay. I'm gonna look at one more real quick. Someone said IWM. All right, I'm gonna look at those last two real quick, and we'll call it a wrap here. IWM and XLE, and we'll pretty much call it a wrap here for today, guys. All right. IWM does not look pretty. I don't think this looks pretty by any chance right now. This more so looks like a little bit more of a bear flag to me right now. This is not pretty, and so this may also coincide with how the market looks in a general aspect. But to me, on a weekly here, this is more so a little bit of a bear flag. That's pretty much what I get from this. Could this also just have another sideways candle in pretty much uh, comparison to SPY having maybe an inside day tomorrow, like I was mentioning with a little falling wedge action? It's entirely possible, but it's a matter of pretty much a little bit of time here before this ends up breaking down. And this is pretty much where we ended up closing today, is that spot where we're ideally going to end up closing and breaking down below this trend line support, which is not going to be healthy for the broader market. All right. So this is pretty much the ideal spot that you want to make note of. This 203 half, 203 and a quarter here is that ideal spot that you want to look at moving forward in the coming days here as the week goes on. Because if you break that level off of this trend line support, that's not going to be pretty, and we're going to see the broader market continue with the sell-off with tech leading in that aspect. All right. We also saw pretty much pre-bear off of that. We saw the SMH, I think it was, that ended up getting a Nimbus put as well. That was pretty much the semis just literally leading this entire dump as well that we had today. So that's something that's also to keep in mind. Obviously, you see that a lot of these bears are pretty much getting longer dated expiration, as they should basically, because once you get these sporadic moves to the upside, they can definitely kill premium. So you definitely want to get time on your side. So if you're trying to go short on IWM, which is what I imagine you're trying to do off of this, is that you definitely want to make sure you get time, at least go out towards May to give yourself enough time for this little wet rising wedge, little bear flag formation to play out. And that way you're not pretty much crunching or maybe a weekly on that in terms of having more time on your side there basically. All right. So that's what I would basically say in terms of that. The other one you mentioned to watch was XLE. I believe that we had also a Nimbus put XLE. Uh, So I'm not, I quote me, but maybe someone can actually double check on that. But if I'm not mistaken, we had a Nimbus put on XLE today. Energy hasn't been doing so well with the broader market. Usually, when we get the rotation and we see tech usually dump, there's usually signs that we get XLE running, maybe with financials or some sort. That's not the case right now. Um, Maybe I can get a better picture off of the daily. It's not showing more so a trend line break yet. That maybe concerns me. Let's see if there's maybe a trend line break that we can identify real quick. Let's see if there's one that's pretty much standing out right now. So yeah, you're basically right at trend line support right now if you're looking at this. If I pretty much expand it as much as I can right here, you're literally sitting right here at that trend line support right now where you basically closed. So this is the spot where you would want to see buyers pretty much defend right now. We want to get a bounce here in energy tomorrow. That could be leading into how the banks are setting up with falling wedges, with energy basically sitting as support. That could be where your strength comes into tomorrow into play, is the energy and the financial sector, while tech continues to take the heat. So that's what I would look for. It's ideally more than likely that we probably see tech get a small gap up tomorrow, and energy as well, and then we'll see that rotation as pretty much tech drops off, financials and energy will pick up that steam as we go into the Fed minutes tomorrow. That would be the scenario that I'm looking at. But if you really wanted to know in terms of XLE, again, you're sitting right at support here right now. If you break under 75.20, I think that's going to be the spot where it's going to smell trouble for energy. And that's when you pretty much want to pretty much clear any of your positions that you have that are long. All right. And I say that for short dated positions. Obviously, if you're a long-term investor, you're a long-term investor. All right. But under that 75 mark, ideally, ballpark, that's where you want to stay clear of energy, because then you're going to break this entire uptrend that you started since the end of December. All right. So hopefully that kind of gave you an idea in terms of where you are right now with energy, with IWM. Obviously, the internals right now are not looking anything as close to what it was yesterday. Yesterday we looked pretty nice. Unusual, Nimbus, and Rapid. Damn, they hit everything on that thing. Jeez. Long-term investment until my expiration date. Jay. So again, though, pretty much as you saw, IWM, nice little rising wedge, bear flag formation. It's just a matter of time until that plays out off the weekly. Energy right off support. You would ideally expect energy to pretty much bounce tomorrow. Financials, I would expect to see those falling wedge on JPM, Goldman Sachs play out tomorrow. Hopefully that may end up playing out how I project it to be. You get in before it breaks the downtrend resistance on those falling wedges for Goldman Sachs and JPM in particular, and then you get a nice little premium spike in hope that the Fed minutes basically announces increase in rate hikes, and of course that benefits the banks. So those are pretty much the two that I'm pretty much expecting to play out in my head right now in that format. But other than that, you see that I'm pretty much gauging away from a lot of those tech names. I don't want to get caught in trying to pick the direction of those and getting caught pretty much just losing premium off of that. Especially if we have some kind of inside day on SPY tomorrow. That's definitely not the spot that I want to be in tomorrow. I'm going to look to see if I do a little bit more work tomorrow yet again. Hopefully I can find another play like the one I had this morning on the SST, but I doubt we get one like that this week. Maybe have to hold on until next week and we get a beautiful play like that. But again, hopefully you guys also, those of you that pretty much joined in late, I'm looking to see that BBAI tomorrow. Let's see if we get a nice little squeeze out of this one. This is the one that caught my attention after I was here. I'm going to look to see if we hold that $10.50 mark tomorrow as this little resistance point that we had. And then I'm going to see if we get a beautiful continuation out of that one. And I'm going to look to see how high we get on that one tomorrow. All right. But I think that kind of wraps up what I was looking at. Hopefully, the few names I reviewed for you guys kind of gave you a better idea of where we stand, especially those of you that pretty much pointed out IWM, XLE. That definitely gave you a bigger picture of the entire broader market for that aspect. But today was definitely a flip of the script from compared to yesterday's price action. But the fact that Apple and Microsoft ran so hard yesterday together, that should have been a red flag. I was pretty much not expecting that kind of comment out of the Feds today. I think that caught everyone a little bit by surprise. I was expecting maybe a candle or a wick, but not that kind of sell off following that kind of headline of what the Feds pretty much said. So it is what it is at this point. Let's see what the Fed minutes have tomorrow. I think the only worst thing that we can have right now is the Feds pretty much announce a rate hike that increases yet again for the year, and then maybe increase the number of times that we have that rate hike. That'll probably be the worst case tomorrow, in which that continues to sell off, and we have a beautiful little red day yet again into the coming days. All right, but that'll wrap it up for me, guys. I'll see you guys on live tomorrow morning. Again, appreciate you guys joining. Drop a like, but I'll see you guys in the morning. Later, guys.